Good afternoon, everyone. It's been a while since our last Hubble series, and a lot of things have been going on, and we're doing quite good and start delivering what we have last year. So, as of today, we are discussing a new question for financial infrastructure that what actually happens when AI agents are, instead of just giving recommendations, but actually requesting actions, moving money like across system and initiating the financial workflows. So currently in the human-driven financial world, definitely approval was oftentimes enough. Like a person can review, can approve, and can execute. But as capital becomes autonomous and apparently more efficient, approval alone may no longer guarantee the correct execution, which that is why we are exploring the agent-native banking infrastructure at Vishwa Lab. So we define it as a financial stack that allows AI agent to operate, but only within a defined, controlled, and verifiable constraint. So, as for the opening, it would be great for both of you to briefly introduce yourself and share why this topic is relevant from your perspective. Can start with Bruno.
Perfect. Thanks, Nathan. I'm Bruno Batavia, partner at Valor Capital Group, also director of emerging technologies. So I oversee investments on AI, blockchain, especially, and also traditional fintech infra. Now, this is very aligned with what we focus here in terms of the investment thesis. So a lot of time looking at the intersection of fintech infrastructure, tokenization, stablecoins, AI, even like emerging markets like financial rails, like instant payments. Right? But this is very relevant because we're just watching agents move from recommendation to execution, as you mentioned. Right? So and at the moment that AI can trigger a payment, they can rebalance a treasury, pay a supplier, interact with like a tokenized asset even. The question is, can the model reason? This is just the first question. And how can the financial system control it, verify it, audit it? So there are a lot of additional layers of questions, nuances that have to be addressed. So it can have actually meaningful production level institutional infrastructure and really realize AI future that we believe that's playing out right now.
Thanks, Bruno. Canice, it's your turn.
Thank you, Nate, and thank you for inviting me to this podcast. Excited to speak on this topic here. So, my background, most recently, I was with Salesforce. I was leading their professional services in the AI strategy team, focused a lot on the we call regulated industries, which is financial services, banking, insurance, health tech, and health insurance as well. And as everybody knows, Salesforce right now is very focused on agent force, especially looking at agentic applications, at agentic transactions and workflows. And I think naturally gets to the question in terms of how does agent and I call the human in the loop, but expert in the loop interact with each other, particularly not only in terms of just CRM applications, but getting into the financial transactions. I think it's a very interesting intersection of that. You bring in digital assets as well, and it gets super interesting as well, right? So currently I am also a fractional executive and advisor for a number of companies focused on, again, fintech and financial services for the go-to-market. And I think I see definitely a lot of emerging, interesting trends going on in this area as well. So again, glad to be here.
Yeah, that really naturally fit into this discussion so smoothly into the very first question from an enterprise adoption level. What is actually fitting for big companies like Salesforce or like the regulated business? What has changed now that AI is moving from recommendation to execution? That's for you, Kenny.
For me, okay, great. I think I've seen even just the last few months, right, a transition from exploring and looking at AI and agentic solution to doing something with the AI and agentic solution. I think particular financial services, probably rightly so, are more cautious as they move into more automated transactions, if you will, right? So it's still very much focused on interacting with customers and using AI to help with that customer interaction and sometimes automated customer interaction. But it is definitely starting to look at in terms of how do we automate some of these actual transactions and how do we do it in a responsible and trusted manner. I'll talk about that a little bit later as well, right? So I think that is starting to definitely, I would say still very much in the leading front the way I see it, but on the other hand, it's moving so quickly, right? So
Yeah, I mean, because basically today's stack is definitely very interesting, right? Because Canice, you're sitting on the downstream on the service side. I'm in the middle layer, and Bruno has an experience on the upper side where the capital allocators and regulators on that side of things. So, question for Bruno is that as fintech infrastructure evolves, what do you use like AI agents fitting into all of the categories that you have mentioned, right? Payments, like tokenization, like financial rails involving digital assets and all.
Perfect. As you mentioned, like even like before I joined Valor, I spent like more than 10 years at the central bank as a regulator and also as a builder more on the market infrastructure, focusing on the convergence of this emerging technologies like AI and blockchain. So I see, especially when it comes to agents, as I see agents as a new orchestration layer. So you have some usually today a human like a software deciding the workflow, card, the bank transfers, if it's like a stable coin payment, a PIX, which is the instant payment system in Brazil, what kind of like ledger the money is moving, right? And but now I think in the future the agents will do this job, right? So they'll make the decision dynamically based on cost, speed, risk, compliance. So it will be much more efficient. But if you think on the payment side, the agent will become the initiator. They will be routing the transaction. Think about tokenization of real assets more broadly, stocks, commodities, capital markets in general. The agents will be the portfolio operator. They will be allocating the investments, managing the collateral, thinking about how to move the tokenized assets. I think this is like heavy lifting, institutional capital, wholesale money movement. So that's where control is very important, governance and guardrails. So I think that the conversation here is very interesting.
Yes, exactly. Echoing back to your point, definitely the shift is not simply from manual to automated, like what happened in other industry, right? It's more of human approved finance to agent executed finance, because that's more on if anything goes wrong, that impact the economy directly. So probably the next best question we have is like a lot of current discussion is about like giving agent access to like a wallet, APIs or accounts and all of those. Why is those access not really enough? So specifically in crypto and programmable finance or digital assets, wallets and smart contract already give agents powerful rail. So Bruno, this question for you, what is still missing in this perspective?
Yeah, I think access is actually the easier part, right? You can give your PITs or a wallet for agent to transact with. But when it comes to traditional finance, banking, capital markets, we have to have the proper features and guardrails in place. So whether like a specific counterparty is allowed, whether the price is acceptable, if there's a budget for a specific transaction, right? If the agent has been manipulated, and even I think additional layers of the stack regarding tax, compliance treatment. I think we're in this very early days that the whole thing is being built, especially because as we see here, of course, like agents can transact on top of traditional rails, instant payment systems, credit card rails. But I think the powerful convergence happens when you actually put together blockchain infrastructure, programmability and automation capabilities with the agentic transaction, even like the long time horizon that we have with the newest models like Fable. So things are happening right now. We have the tech maturity. We have global programmable rails, right? But we need to have the traditional financial stack, the traditional banking stack, even the fintech stack that we're used to, but now operating with agents, real time, dynamically, but also operating blockchain rails. Early days, exciting times, but we have to have all the checks in places.
Yeah, definitely. You mentioned all of those necessary checks before actually moving the money at scale, because I think you also mentioned at the beginning of this podcast, like a wholesale, right? Because that's a very important scale because currently a lot of payments, also transaction side, it's like fraction of cents, which means that sure, it can battle test or like stress test the entire infrastructure to make sure that we can support like a multiple agent operating at machine speed, right? But actually, from the economy perspective, what people are actually afraid of, that's the real question. So, Kenny, this one is for you. So, how should enterprises really think about the differences between the permission and the control?
I think it's a really important question. I think that gets to the heart of the matter, right? Particularly for financial service institution, which is, yes, they want to move at, I'll call agentic speed, but there is a level of control to establish that level of trust. Kind of something I alluded to earlier. How do you establish that level of trust, particularly between clients and whoever are the transacting parties involved? Think about what a human would do. You have layers of control based on different types of transaction, and of course, size of transaction. You have policies in place. You have various different legal and regulatory requirements in place, particularly as the transaction gets bigger or gets more complex. There are a lot of different things that's kind of layers and layers of control, as well as just to make sure that it's authenticated and is legal and all that aspect of it. So that have multiple parties involved. Two parties make it easy. Multiple parties gets even more complicated if you think about it, right? So an agentic solution, if it's going to be automated, has to start replicating those layers of management and control and to establish the level of trust in order for these institutions to start really adopting it, right? So I think that's going to be really important. And how do you demonstrate that and prove that from not only the technology provider, but also the financial service institution, and finally, ultimately, to the people who are doing the transaction themselves. So I think it's going to take a little time, but it's definitely moving in that direction.
Yeah, that's what naturally fit into the next segment of this topic. Like what current infrastructure or what existing infrastructure actually breaks or not suitable for moving towards the agentic like future, right? So currently, there are a lot of assumptions in today's financial infrastructure. For instance, like the execution venue just directly take whatever agent's decision and just directly execute. No one is actually guardrail or guaranteed what agent generates or what agent decides actually sits within the original mandate of their authorizers, which could be financial institutions, which could be asset managers, which could be even like a retails, right? So question for you, Canice, following on that topic. How should accountability work when an autonomous agent makes a financial request? Like, what if it
Yes.
fails?
Yeah, I think it is very important to be, if when a human makes a transaction or facilitating a transaction, there are responsibilities and authorities involved here. Agents, especially, I think it's particularly in this topic, has to show, traceability. You have to look at the various different policies, and you need to be able to, for both the client, particularly if there are other parties involved that needs to validate the transaction, et cetera. You need to look at all the steps that led toward that transaction and the completion of that transaction and clearing of the assets. All those things need to be very traceable in order for that accountability to be there, right? So you need to move at agentic speed, but you need to have all that in place in order for this to be truly accountable and truly legal.
Yeah, I mean, that's definitely from the operator perspective or from the service sector perspective, right? So, Bruno, the question for you is from both the regulator background and given your current role as an investor. So, from the infrastructure or investment or the regulation perspective, where is the biggest gap between crypto rail or blockchain as infrastructure in general? Of current financial system and regulator, as well as those quote unquote institution ready autonomous finance?
I think from an investment perspective, it's like an amazing time because we're actually building the rails and the layers. And when you think about blockchain in general as an infrastructure, blockchain is solving settlement on a global level. But there are different types of workflows and layers like authorization, off-chain identity, reputation, compliance that we have to solve. But it's interesting that there are many, many standards, even like traditional big companies, they're trying to put together standards, like even like Vishwa, right, on the blockchain side of the thing, of the fence. So I think X402, in terms of payment requests, we have like Coinbase, Cloudflare, and have Stripe with Tempo, their new blockchain network with MPP. And even like the credit card players like Visa and MasterCard, right? So they're trying to understand how to play this game and how to build on top of these new emerging tech layers that are blockchain based, but also agentic enabled, right? And also from a compliance standpoint, it's quite interesting because if you're doing on-chain finance plus agentic finance, there are a lot of challenges because of the speed. It's machine driven, right? So you don't have a human operator doing step by step. So microtransactions very fast, but at the same time, there's an opportunity to leverage the power of the blockchain itself because you have transparency, data availability, right? And a level of programmability that you can enforce compliance requirements. Not only have the code and the law, but you can actually whitelist markets, enable specific types of transactions, money movements, and investments. So it's new ground, but the opportunities are there. The good thing is that you can automate the policy side, the compliance side as well, to move in pace with the agentic economy.
Yeah, I mean, that exactly echoes what people actually ask me, like, what does that look like for autonomous capital? So at Vishwa Lab, we definitely think agent-native banking infrastructure needs to sit in between the agent decision-making, like you guys both talk about authorizers, regulator perspective, capital owner, definitely on this side, and the actual capital movement on the other side, which all of the service sectors and all of the execution vendors, right? Bruno, I'm glad that you mentioned all major players, including X42, including Stripe MPP, including the Visa CLI, as well as MasterCard Agent Pay. Because currently we are top 2 on X42 in general and top 1 on X42 on Solana. Also, we are integrating with Visa CLI and the MasterCard Agent Pay with specific pilot use cases. The entire stack definitely includes like agent decision layer, a mandate or a policy layer, or like execution control, like wallet, account access, venue execution, even auditability at the end, like a post execution. So definitely agent can request actions, but the execution should only happen when that action satisfy authorization, solvency, and the execution consistency. So let's say if both of you guys like designing the entire banking infrastructure for agents from scratch, because I mentioned all of those different faction of players, right? Like what layers would it need, like specifically, let's say for the MVP, right? So Canice, specifically for you is what does a good mandate or a policy layer look like for the enterprises?
Yeah, I think that's, again, a very big question. So I'll highlight a couple of the key requirements, maybe. How about that? So I think one of the key requirements is to be able to really have, not only in terms of the verifiability, so defining what the intent of the transaction is, who the party is coming from, who the party is going to, the capital, et cetera, and the various different jurisdiction involved, right? Then also on top of that, then you need to look at various different policies involved. It's also important to look at the contracts involved. These transactions, there are contracts that needs to be held when you're performing these transactions. All those things needs to be really verified and checked before you even think about actually doing the transaction itself. So I think those are all things really, really important. And that needs to be integrated. You mentioned the concept of designing it from scratch, I think, which is you can design from scratch, but also keep in mind, decent financial service institutions has lots of already existing infrastructure. So whatever the solution needs to work in, they're not going to throw away everything, just go do this, right? That's not going to happen. So you have to think about how this solution fits into their already complex existing infrastructure, both technology, process, and otherwise, for this to truly be adopted. And I think that's going to be, in the intersection, is going to be really critical. And those who can get there faster and really do it properly can really capture a lot of market share.
What about you, Bruno? What do you think about if you were designing an MVP for the entire end-to-end workflow? Like what would be mission critical or something that should not be missing at all?
Yeah, I think it's quite interesting because we have some infrastructure in place already, but there are some white spaces that they need to be addressed. So I think principal identity, who's responsible for the agent and how you attach the principal with the agent itself, and agent identity, reputation, discoverability, and also the mandate, the policy, what's the agent allowed to do. Maybe on the wallets, the transactional side, and who has the access to specific accounts, transactional thresholds as well. And even before the money moves or some agent perform an investment, how do you control execution pre-screening, but in an automated fashion that in a way that doesn't like become like a bottleneck. Also thinking about solvency, like intent, like risk, and also the rails themselves, right? So this transaction will be routed to traditional banking rails, like instant payment rails, credit card rails, or even like on-chain wallets. So how do you route this compliance reconciliation? I'm trying to think about like traditional systems as well, because when you're thinking of connection banking infrastructure, which are AI enabled, they have to talk with the legacy core banking systems, right? Even tech systems like accounting, fiscal, documentation. And I see that maybe some of the winners will be the ones that will be able to integrate all these types of stacks in a very clever way, right? So a lot of ground to cover as we're discussing here, but that's where the opportunity lies when you're creating a new company, addressing your market.
Yeah, I mean, definitely you mentioned about accounting, also the taxation, and all of those existing governance or existing liability that had to be adopted to the new rails, right? So that's also the good part of blockchain. I believe that you guys invested in a lot of blockchain companies, and that's definitely part of the reason, right? Because blockchain creates the immutable track record for all of those, not just human-made transactions, but also agent-made transactions. And then connecting back to what you discussed about the agent identity, who is authorizing the agent, who is contributing to the agent that has been coded in this way or has been instructed in this way. So those immutable track records definitely create like a traceable and very efficient way and trustworthy way for regulators or third party to come in to make sure that nothing bad has happened. Right. So after the first 25 minutes, we identify the problem, we scope out the solution. So definitely the next part is the institutional adoption. So question for both of you is what would the institution need before they trust agents with real financial work? I mean, we have existing customers, so I can chime in a little bit, but definitely would love to hear both of you guys' opinion. Bruno, if we want to start.
I think it's a very interesting point because when you think about institution capital, right, and financial market infrastructure, especially on the wholesale level, the volumes are huge, right? So think about like a wholesale FX settlement. There are a few companies that operate like with Swift on the messaging side, but on the settlement side, there's a big legacy company that's called CLS Group. It settles roughly $10 to $15 trillion per day. So this is the type of volumes that the agentic economy at some point will have to handle. So of course, we still microtransactions and we experiment our way, but then we need to address these heavy lifting and big volumes and institutional use cases. But I think that bounded autonomy, because agents that we can really trust and you'll be sure that they act in a specific manner within explicit limits, maybe like revocability, escalation as well, humans in the loop as well, human approvals, depending on the amounts and the thresholds. These new systems are being designed right now, but having a control panel and a governance in a way to really define specific mandates and thresholds, I think is the way to go. And you mentioned auditability, right? So for liability, you need clarity. You need to have an audit trail, so visibility on what went wrong, and even like compliance and disputes at some point. Different types of solutions, workflows have to be in place. The good thing that things are starting to move quickly, and Vishwa is addressing many of them.
Yeah, I did hear a very controversial idea for AI replacing people's job, right? Because the only type of job that AI cannot replace is people who can't be held accountable, right? So that's a very controversial idea that I've heard. Like, from what you responded, definitely address part of it because that's pretty much aligned to what we discover during our conversation with our existing client, like in the FS techs, as well as those institutions managing the treasury and doing curations. Definitely, they are willing to first do the automation because currently a lot of things are still manual and factionalized, like you said, across multiple private venues and a single public venue that process all of those private orders at the same time. So those are definitely something that they want to automate before they, like can't fully embrace the concept of, I mean, people can use AI to automate the process, but they still need to try to get rid of all of those manual mistakes. That's the first. What about you, Canice? The same question. What would the enterprises need before they trust agents with real financial?
I'm going to approach that in a slightly different perspective. So I like to think of in terms of what are the use cases and how do you go from something a little bit easier to a bit more complicated as you kind of go up that adoption curve, if you will. And I like to use a classic 2x2. Or maybe one way to look at it is to look at business value in one dimension and feasibility in a different dimension. What are the use cases that will be more feasible but higher value? And then you go towards something more high value, but takes more effort to be feasible. So in other words, what breaks down to what are the simpler transactions that can be done? and build that level of momentum before you're trying to say automate a $5 million loan, for instance. So that's probably not going to happen, right? But you can work towards some goal like that. I think that's kind of how generally adoption happens in enterprise. So prove it and then kind of go small and then go bigger and bigger, bigger. But you have to be in the game to even get going. I think that's going to be important.
Yeah, you mentioned a very interesting point. If spending how much money is the risk tolerance, because I am able to use agent to buy me a toothpaste on Amazon for $2. But if I'm allowing agents to operate, let's say 5 million worth of our fundraising money, it is questionable, a big question mark, right? Before I can put my trust, I definitely need to check everything. And I need to make sure that if I'm allowing an agent to work on this, every single check mark has to be in place, even when I'm not. So it's really a balance between the efficiency and the risk tolerance. A follow-up question on Bruno, what would make an agent native banking a real infrastructure category rather than just like quote unquote a trend of AI? Because I tend to be very transparent in this way because we've seen a lot of big hypes in the entire space. People are chatting about different type of standard. People are chatting about different type of like micro use cases. But what you said, the real problem is that how to make sure that the economy is sustainable and scalable. Turn the floor to you.
Yeah. So some of the items that we've discussed previously, like tech maturity, right? We're getting there. But also standards like across the industry. So, like siloed, right? And the regulators can understand, like auditing firms can understand that we have industry standards across different types of businesses. And maybe the most important, so I think the category has to develop its risk compliance liability models, right? So we have this like credit card networks, right? With PSPs, core banking systems. They all have understood roles today. So we have to have this for agentic payments, agentic investments, especially if they're operating on top of like a novel rail, like blockchain infrastructure, right? So, but you can like benchmark a lot from what we have had in the past. I think the difference is that in a lot of the situations, we won't have a human in the loop, right? So a lot of those situations are going to have machine to machine transactions, full-time processes and workflows at machine speed. So I think the big issue, challenge, and even opportunity lies in this new part of the stack and new use cases that are kind of fully machine driven as well.
I mean, that will be a very good benchmark for our final question for each of you guys. So to summarize, because for this entire podcast, we've been covering all the way from the beginning of this problem, like the beginning of the trend, identifying the real problem, and so like narrowing down the solution from the ground up and the first principle level and talking about the practicality and the scalability. So in one sentence, what must be true for agent native banking to become a real infrastructure category? So Canice.
Well, I'll answer that in one word. How about trust? Right. And here's a sentence that follow that one word. I think it's an ability to be able to establish that level of trust so people will trust the agentic solution or agentic automation, if you will, right? You need to establish that level of trust, not only with your clients, but internally, people are going to have to go do this, right? And you have to establish a level of trust with the regulators and other stakeholders. So I think it's a layer of trust that gets built over time, and I think it's important to do that. And if you focus on that and what can possibly go wrong, how do you establish that level of trust? It gives you a good, say, North Star towards the solution.
What about you, Bruno?
Just want to reinforce the idea here. I think the future is not like a blind autonomy for the agents raise. I think it lies a bit like in a level of like controlled autonomy. So of course agents can act, but only inside like verifiable financial constraints and boundaries, right? So this kind of governance guardrail is kind of a necessity right now for institutional level of capital.
Yeah, I mean, for me, I agree with both of you. I mean, trust is definitely important, and definitely because there's very counterintuitive thought for security business, like in traditional space, right? Because people don't really realize how important the security is until things got hacked. And then for the financial regulators, they're not even willing to take the risk of getting hacked. So that's why they're pretty conservative on this front. So my take on this is like use the language that they are able to understand. So in our real sales pitch, we don't do, okay, we use agent to do whatever, right? We just say we help you earn more money, like save you more cost, and help you save your money from getting lost. So those are the language that they're able to understand. So we have to put the new tech into their shoes, so to make sure that they can understand what we are actually talking about. I mean, very honest feedback is that they might not even care about what is like going on underneath, right? It could be some very fancy technology, or it could be some like really human intelligence that you have 5,000 people operating the system, right? But they don't care. They care about the outcome. And we should really speak their language to let them know the entire stack is valuable. I mean, that's pretty much it for today. So to summarize, definitely the future of finance may not be fully manual, right? And it may not be blindly autonomous either. So it will likely be like controlled by both sides, execution environment where agent can act, but only within the human verified constraints. So probably both good side and the bad side. And we just try to maximize the good side of AI to make sure the efficiency is maximized while within a defined, controlled. So that is the opportunity behind the entire agent native banking infrastructure. So this is the whole episode of our Hubble episode 2. And thanks everyone for listening. I will see you guys next time.